But how much does the market really care about non-China deals? Let's bring in Piper Sandler Chief Investment Strategist, Michael Kantrowitz. Michael, welcome. I can't help but think that the deals with other countries have to include some kind of China component, right? Because it really sounds like the Trump administration is trying to isolate China. China is trying to keep that from happening. So how much of that are we going to see play out, and how much of it matters until we see what's going to happen with China and whether this enormous tariff rate comes down?
Yeah, good afternoon. I think that does matter at the fringe, but ultimately, what I think continued to propel markets the last couple of weeks is how President Trump said that the tariffs in China, which are currently 145%, of course, and I'm paraphrasing, will come down. And we believe they will. He campaigned at a rate of something, he mentioned 60% pretty often. So I think ultimately, again, the market's heard a lot and has taken President Trump and the administration at their word. But I think we're going to be going from just, hearing is believing to wanting to see action to believe.
So what's the deadline there? Is it this 90-day tariff window? I mean, how long do you think investors need to tap their feet and wait for reality to set in, whatever that is?
Well, yeah, that's the interesting aspect of this current backdrop, is that we really still have yet to see a broad-based material impact from the price increases that we're seeing in some of the survey data, from the demand hits that we're likely to see in the economy. We're seeing it in the shipping data, the cargo data, but we're not seeing it on the shelves really all that much. So, even in Q1 earnings season, which has been fine, there hasn't been much guidance to help shape the picture for investors. So really all they have to go with right now is coincident and lagging data and rhetoric from the administration, which admittedly has been incrementally positive. So, that's not going to last forever. And either it's going to be a function of time until all of that changes and the data show up, or the market keeps moving higher. And I think that also raises the bar for some action to need to happen.
And of course, Canada's Prime Minister Mark Carney is going to be going to the White House tomorrow to meet with President Trump. So one to watch, perhaps, in light of what this means for North American trade flows. You call this an economic suppression rather than an economic recession. What does that mean?
Yeah. Well, I don't really like the term recession because it's too binary, and you could have all sorts of recessions: short ones, long ones, deep ones, shallow ones. What's going on now is really a suppression of economic activity due to uncertainty about the future. This is not coming, or the potential weak data that is likely to come in the next several months is not a function of the classic cycle drivers, such as a shock from interest rates or a spike in oil prices. If anything, interest rates have been fairly well behaved, albeit flat for the last couple of years, and oil prices are at a multi-year low. So, putting that aside, the economy should be pretty good right now, but all this uncertainty is somewhat holding it back or suppressing it.
Well, it is interesting we're seeing oil prices come down. So far, the inflation data seems to be somewhat behaving, or at least moving in the right direction, according to Wall Street expectations. And we know labor data has been holding up. I mean, the jobs report on Friday was better than expected. If you're the Fed, how are you gaming this out this week?
I don't think you're doing anything different. I don't think anything has changed for the Fed. We saw some better data in terms of job openings came down. Powell often talks about that. PCE, core inflation, came down. The jobs market was okay. Certainly the bulk of the data that Powell looks at. There are obviously signs of rising inflation. We saw that in the last week. The ISM manufacturing prices paid got up to nearly 70. The services prices paid today got up to about 65. So those are worrisome numbers. But remember, the last time we saw those numbers, oil prices were also rising sharply in the first half of 2022, which couldn't be further from the case today. So I think Powell's going to have to continue to wait and see, as so are investors as well.